And how's everybody doing tonight? Drop it in the chat. How you're feeling, how you're doing. Let's see responses from everybody. Tilty's out here stretching her neck. I see you, girl. People are looking great. Let's see responses. Thank you, thank you, thank you. Okay, perfect. Okay, perfect. So I'm gonna go ahead and share my screen in 0.2 seconds. So tonight's session was supposed to feature a special guest. No, it's not Manny, because everybody was like, is it Manny? No. He may make an appearance next week, but I'm not entirely sure. But tonight's guest is going to give me a new time. We were talking about maybe this Friday, but honestly, Friday is not a good day since it's Friday, so a lot of people won't get on. So I'm going to see if I can do an extended session next week, which will make next week our last and final session of the bootcamp. So tonight, I'm going to run through a lot of information. And in specific, I'm going to primarily focus first and foremost on identifying reversals. And then two, I'm going to go over the scanner sauce setup and how to utilize it for both FRX and HFX the way I know how to use it. So with that said, let's get started. So if you can see my screen, hear my voice, and see my face, drop me a 111 in the chat. See my screen, hear my voice, see my face, drop me a 111 in the chat. Okay, perfect. So let's see, I was trading. Wow, that's crazy. I literally said last night, I was like, if it breaks this trend line and this level is gonna drop to the pits, and it did just that. So let's get into it. So I'm not gonna go into the monthly. So let me see, where do I wanna go from? Where do I wanna go from? This works. Okay. So let's do this. Let's hide the indicators. And we're gonna delete this trend line. So right now, let me switch to the 4-hour for a quick second. Nice. Okay, cool. So right now we are in the 4-hour time frame, right? 4-hour time frame. Currently, price is roughly in this zone. More likely over here, but for the purposes of the 4-hour time frame, let's just say price is right around over here. Now, what I want to focus on real quick is this area, this point. Let me get an ellipse on here. And let's make this more visible. Boom. This area, this area, this area. Now, there's a few things that is happening over here, right? There is a theory from market geometry that says price will respect a support or resistance level at least 3 times, maybe 4th, but usually on the 4th touch, you don't want to trade it because it could break through or it could respect it. And definitely on the 5th touch, if it hasn't broken it on the 4th touch, more than likely on the 5th touch, it'll go in the opposite direction of what it's been doing. So with that said, we're seeing over here, price touched the weekly resistance level 1, 2, and 3 times, right? Now, what we're seeing here is a massive reaction every single time that it's touched it, right? From once it broke down this level, it has remained under this resistance level. So the reason that that is important is because not only is this resistance level a strong level because it's from the weekly, but price has only touched it 3 times, meaning that if this had not happened yet, my assumption would have been realistically, price is going to reach all the way up here, respect the resistance level, and drop down because price has only touched that level only 3 times. On the 4th touch, I would not want to trade it unless I am certain, and by certain, I would probably want to wait until some of the move has solidified itself, meaning I wouldn't want to set like a sell limit because over here we would be looking for sells. I would want to look at this chart in real time and I want to trade off this resistance level once price reaches that level again. So first thing about reversals that we want to just keep in mind, just basics, is that price realistically will reverse from this uptrend here and here for the matter of the fact that it's only reached this price level before, right? That is the first thing. Second thing that I want to talk about this level. And for those of you that do not know this person, he created the teacup strategy. I'm not going to get into the teacup strategy because that is not my strategy. I know the basics of the teacup strategy, but essentially the teacup strategy is this. What you would realistically see is that based off previous highs or previous lows, once price reaches that same level, right? Like this is a teacup. It would go all the way down, all the way up. Once it reaches that same level, because teacup strategies are pending orders, meaning it would be a sell limit or a buy limit. Once it reaches the same level, you would also see the formation of another teacup, meaning you would see a similar move transpire the way it did over here. So what we saw is that price went down and price went down again. And Lou, who created the teacup strategy and is the co-creator of Gold Cup, he keeps things very, very simple, but essentially the teacup strategy is based off market structure. It's just a very straightforward strategy that allows you to look for only like three to four critical things that when you break it down, you're like, that's the strategy. Literally the strategy is, let me switch to regular candles real quick. If I recall correctly, which I'm not gonna pretend like I know the teacup strategy the way I know this superstar strategy, is you would essentially want to see two red and blue candles next to each other, closing roughly at the same level. Then for a sell, I believe you'd want to see a red candle opening and closing below these two candles, the way it does over here. And then you would literally use the body, the top of the body of these candles to have that be your entry level, because what tends to happen is price would literally reach that level and then repeat that move. That is essentially the general gist of a teacup strategy. Please know this, I do not utilize the teacup strategy religiously, so there's more to a teacup strategy. I just quickly ran through it. Do not take this training as me training you on Gold Cup or on teacups, because that is not my strategy. I'm just showing you guys that even though I don't trade the teacup strategy, but I do understand the basics of reversals, me just looking at this chart and seeing where price reached that previous weekly resistance shows to me that we're seeing one big teacup and another big teacup. But all in all, teacups and reversals are really just based on market structure. So the first thing about reversals, if you want to start identifying reversals, is literally zooming out and seeing where has price returned to create equal highs, equal high, equal high, equal high, and has had a similar reaction, meaning sells and sells, and how many times has it touched that level? Because if it's touched it 3 times, if it's going back the fourth touch, do not think with 100% certainty that you should get into the same type of trade, because historically, usually on the fourth, latest the fifth touch, price will move opposite of what it's done historically, right? So now let me switch back to Heikin-Ashi candles. So let me just delete this and delete this. So now let's park right over here for a second, right? Although we're seeing that these are wicks, which is how far price traveled outside of the body of the candle. Whereas this area, price has candles with bodies that exceeded these previous bodies. These candles are showing us some very important information regarding reversals, right? So let me just delete this. And for the time being, add all tracks, right? So as I mentioned before, whenever we see full-bodied candles like this one and this one, that means the trend or the directional move of the market is very, very strong. Now, whenever we're seeing candle bodies get smaller and smaller, and we're seeing dojis and we're seeing wicks on both sides, that is indicating that that is the beginning of more indecision in the market. Now, what we saw here, it got smaller, doji, got a little bigger, but we see more wicks. Candle bodies are getting bigger. Now we're seeing full-bodied candles. Then all of a sudden, right, this candle got drastically smaller. Now, one thing to note, and this is the same concepts as identifying your trends, like is price creating higher highs or lower highs. This candle, which is a buyer's candle, so this is the opening, and the top of a buyer's candle is the close. This buyer's candle closed lower than the previous buyer's candle, right? Then even though it's slight, the wick of this candle and the wick of this candle are not the same, are not finishing at the same level. This wick didn't go as high as the previous wick. So that is beginning to tell me that because this candle closed at a lower price level, that may be indicating that the market's direction is beginning to reach an exhaustion level, meaning we may be approaching a reversal level, right? Now, what's happening over here? This looks very similar to a doji, where the body of the candle is a lot smaller than the wicks. This is a very classic doji. Now, because we're seeing the body of this candle for sure is smaller than the previous candles, and it is closing below the previous price level closure of this candle, we are almost certain that we are beginning to approach a reversal. Secondly, about this candle is this wick over here, which is from the seller side, is way bigger than the wick from the buyer's side. So the wick coming down from the top is showing that sellers are trying to push price down, right? Then what do we see over here? We see a red candle with a way larger body. It opened. This is the opening of a sell candle. The top is the opening of a sell candle, right? It opened below the closure of a buyer's candle. It closed below these two candles. You know, even though this wick is from the buyer side, that means that price actually dropped this far down. So buyers immediately came up and made this candle close over here. But now what are we seeing? We're seeing, again, we're seeing prices getting lower and lower and lower, even though these two candles didn't fully close below this previous candle. What we are seeing is that price is creating lower highs and price is still traveling pretty far down. So much so that it's almost like invalidated this whole trading zone, right? So what we're seeing now is that price is getting lower and lower and lower. And over here on these two candles, we're beginning to see fuller candles that are more consistent, indicating that price is stabilizing in a downwards direction. So let me just throw on the drawing tools again. So because of this, right? Because of this, let's get into the 1 hour for a quick second. Because there's a few things about the reversals that is very important, right? Let me just identify a good zone to stay in. That may not be so large. Good zone. We may do 2 zones. Okay, cool. This works. Yeah, this works. So this is gonna be our zone. This is gonna be our zone. Let me just extend it for the purposes of this training. This is gonna be our zone, right? So we see that price traveled, you know, it traveled from way down here all the way to up here. Please note this is not a trend line. I'm just showing you where the price traveled from. This is not a trend line. I'm just highlighting where price traveled. So to way up here. So once price reached this weekly resistance level, price came down, came up, came down, and it had a small little baby pullback that lasted all of 30 minutes, right? So when looking for reversals, and this is something that you can apply for both trading styles, is first thing, and guys, please know this because a lot of people ask me like where I learned how to trade. Well, in general, I am Academy, in specific, Manny. Manny is literally the master of like market geometry. He's trained 12 Go Live educators. He's trained so many people to become profitable traders. He's mentored me and mentors me about trading in general. So if you guys want to grasp fully market geometry, I strongly encourage to check out Manny's channel on Go Live. So when we're looking for reversals, there's a few things I want to start seeing. Right? And this is going to be specifically for sells. It would be the opposite for buys. So the first thing is price would return, or price would establish like the high point or the swing high. Price would establish the high point, right? Like it does over here. Boom. Then number 2, price would establish the low point. like it does over here. Then price will return. It's not always, but this is kind of like a conditional thing, but I'll break into what this means. Price, I'll say it this way. Price fails to return, price fails to create a new higher high or creates, meaning that price didn't exceed this previous high point. It either respected it or it would have been smaller, but it respected it, right? Now, I don't think that's what I meant to do. Now, number 4, price would return to the previous low or breaks it. Now, if you're looking at my screen, in that box, this little box, right? It's not perfect, but it doesn't have to be because it's still there. If you can see what I see, type it in the chat what that shape looks like, what this shape looks like. Type it in the chat if you can identify what this shape looks like. Yes, an M or a double top, right? Now, if you know the basics of trading, M's occur when the market is high. Not always, but usually. So when the market is high and you see an M, that is telling you to go in for a sell, right? Now, if we recap from last week, since I identified this as our trading zone, this area as our trading zone, we also see 2 things. We see price returned to its resistance level, giving us our E1 entry, right? Our E1 entry right over here. That if you would have held from here on a 30-minute time frame, this would have given you easily 30 pips, no problem. Just off an E1 entry. Now, let's say that you missed your E1 entry, right? But you remember that technically the low point, let me just move these out of the way. The low point price created is roughly where this 5-minute support line is, or a 30-minute support line is. That you could have also gotten in over here on an E2, right? But then wait, let's say you missed that also. Price came back where the buyer's candle closed in, retested that E2 entry level, that if you would have waited for it to close and would have seen the opening of this candle, you also would have had your E3. If you're seeing this, drop me a 111 in the chat. If you're seeing this, drop me a 111 in the chat. Awesome, 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 awesome. So now let's get into a little bit more about reversals, right? So let me just see a good classic example about reversals. I don't want to spend too much time on this because then we'll be here just on reversals, but just a few more things about reversals that I'll quickly cover. Whenever we are seeing these inconsistent candle bodies, shapes, and colors, and price isn't traveling far, that just means that price is not sure of where to go. Price is rebalancing itself. It's trying to figure out where it wants to move, trying to figure out what it wants to do. And that price is not sure of where to go, honestly. But because we're seeing what seems to be a lot of rejection from the seller side, meaning for whatever reason, price is not going that far. There's a lot of pushback from the sellers. It broke through just a little bit. But the minute that it broke through, right? Let me just hide this for a second so I can get into this example. The minute that it broke through, it was very short-lived because the next thing that we see is this doji, a doji candle with a massive wick from the seller side, a body that remained almost right where it opened, closing below the previous buyer's candle closure. And that is showing to us that this price may begin to drop. But our first confirmation, going back to the beginning of the session, is at this level has historically shown to be a massive price reaction level where price drops. It dropped over here. It kind of gave you a little fake out where like it began to drop, pulled back up. But then once it finally figured out what it wanted to do off the same previous level, that is our first confirmation that based off just resistance in market geometry theory, that we're more likely going to find sells. Second thing that confirmed our reversal is the formation of this doji candle. Now, dojis usually show us that there's going to be an imminent reversal and that price will begin to drop. Now, with that said, let me just load up our sauce confirmation. Nice. Okay, cool. So now, interesting. Very, very interesting. All right, cool. So with that said, there's a few things that we kind of want to find before even using any strategy. And in specific, most of the strategies that we would utilize usually are for trending markets. Outside of simple scalper, I can't think of very many other strategies that we would utilize for a consolidated market. So with that said, let's start identifying how we could use this strategy. And I'll teach you guys for both FRX and HFX how to utilize it based with the basis of market structure. So for those of you that don't have this template, I'm going to teach you guys how to set it up, right? So on my screen, you should see the settings that are available for this template. Now, the only thing that you guys will not have right now would be, let me just hide this guy, is the pro entry indicator. This is a custom indicator, but essentially it is the same thing as this indicator, which is basically the super trend. So let's go over this scanner, this harmonic scanner strategy. Now, what I encourage you guys to do is at the end of this session is to set it up on your trading view. You can set it up on your harmonic scanner, which is where I originally had it, but set it up on your trading view. So then that way, should you guys choose to trade harmonics, which is what I trade in both FRX and HFX, you can also use this recording, which breaks down the basics of reversals and market structure in conjunction with this strategy to see results. So the first thing that you want to do and I'll drop this in our Traders Bootcamp Telegram, is you want to go through your indicators, right? We have a few different indicators. We have on-chain channels, the McGinley's, stochastic, awesome oscillator, the DMI, and we're going to add the super trend, which the super trend is on there. I don't know why it's listed over here. That's not what it's supposed to be doing, but it's fine, right? The super trend indicator. Now, let's get into all of these indicators, right? All of these indicators, for the most part, read the market in a different capacity, right? There's four main types of indicators. Four main types of indicators. There's indicators for the trend, momentum, volatility, and volume, right? All of these indicators read the markets differently, but when they line up, that is signifying to you that the directional move is pretty accurate and strong. So what are these indicators? So let me just temporarily hide the drawing tools real quick, right? So the first thing that we'll see is the on-chain channel, right? So the on-chain channel is similar to a Bollinger Band. Now, Bollinger Bands and on-chain channels are supposed to show to you kind of like the extent of where price should be traveling to. So what that looks like is that if we're looking for sells, we would want price to be near the top red band. If we're looking for buys, we would want price to be near the bottom blue band, right? This strategy in specific is a color-based strategy. So red is for sells, blue is for buys. So the on-chain channel setting, I'm not setting it up right now, but if you guys want to set it up right now, you're more than welcome to do so on your trading view. The on-chain channels setting is set to 50. What that looks like is you would go into indicators, type in on-chain channels, right? Select it. You would click on settings. You would change the length to 50, keeping your indicator time frame the same as the chart. And then your style would be your upper band is red, your lower band is blue. Why? Red is for sells, blue is for buys. So your first confirmation for a sell would be is where's price in relation to the bands, right? For a sell, we would want ideally price to be near the top red band, especially if we're looking for an E1 type of entry, right? Now, the second indicator, the McGinley. For the purposes of this training, I'll be primarily focusing on just McGinley 4 and McGinley 20. Now, McGinley 4 is giving you your earliest potential entry. For a sell, we would want price to have a flat top red candle opening and closing below the blue McGinley. So the opening for a sell is the top of this candle and crossing and closing below the blue McGinley. We see it here, we see it here, we see it here. What we don't want to do is enter on a candle like this because we basically missed the move. Especially for Forex, we basically missed the move. And sometimes what happens is once it detaches from the blue McGinley, and because the 4 McGinley gives you your possible earliest entry, doesn't always signify the trend, the overall trend of the move. Sometimes this could be the potential end of the sell trade, and then it could completely go in the opposite direction, especially if you're trading HFX. You want to be conscious of this. So your entry candle, or your confirmation candle, sorry, needs to be opening, crossing, and closing below the blue McGinley, right? Now, let's get into McGinley 20 for a second. Now, once price is below the 20 McGinley, specifically on a time frame like the 30, or let's see, let's go to the 1 hour for a second too. Like over here, or like on the 1 hour, or even on a larger time frame, like over here, that means that the trend of the market overall is going down. So once price is below the McGinley 20, which is shown by this black line on my screen, that means that we're officially in a downtrend, right? Over here, I broke through it, pulled up, pulled way past it, boom, went a little sideways. Once it finally crossed and stayed below the 20, all we're seeing primarily is massive sells, massive downward moves. So overall, if price is below your McGinley 20, that is telling us that we are officially in a strong downtrend. If it were above it, right? If it were above it, but we're seeing that the overall move is still down, we just may be seeing the pullback. But if the price is above both the blue and the 20 especially, then that means we're in a buyer's trade. Now, one quick thing about the McGinley 20. If let's say you miss, your entry, right? Let's say you miss your entry. Let's go to the 1 hour real quick. Let's say you miss your entry, which let's say hypothetically was over here, price is in the top red band, it's opening crossing below the blue McGinley. You're like, damn, I missed it. Damn, I missed it. When the 4 and the 20 cross, that is a potential late entry to continue the downwards move of the trend. And I'll get into how that works with market structure if we have enough time. So if the 4 and the 20 cross like they do over here, and we have strong sell confirmations, like strong full-bodied red candles, that is a potential second entry, not necessarily an E2 entry, but a potential second entry for a sell trade, the way they cross over here, right? Now, where'd it go? Our next, where did it go? Our next confirmation or indicator is the stochastic, right? So now the stochastic over here, we need to see for a sell red over blue, red over blue. When the red is over the blue, that is telling us that sellers are in control. So the first thing that you would want to look for the stochastic is red over blue. Now for binary, for my HFX gang, one thing that we know from Simple Scalper, let me load it up real quick, is for Simple Scalper, you ideally right? Ideally for Simple Scalper, let's see, let's find a good zone. My Simple Scalper template is different, guys. I customized mine, so it doesn't have the purple pearls that Millie has. Mine is just a little bit different. So for Simple Scalper, ideally you would want to see for a sell price outside of this purple zone, but realistically re-entering, right? Re-entering. So the way it re-enters over here, technically it re-entered over here, right? But once it re-enters, that means that price is overbought, beginning the downwards move for a sell. Now, one thing that I want to quickly notate is why I added this 60. Ideally, the best place for sells is not only preferably when it's overbought, meaning overbought is when it's outside and above this purple zone, but minimum, especially when I use my supersaw strategy for HFX, I would ideally want my stochastic above the 60, right? So the way it is over here, if I were looking at this from an HFX perspective, price is definitely above the 60. So I would feel comfortable utilizing this as a confirmation for a sell. But for Forex, the biggest thing that you would want to see is red over the blue, right? Now, our next indicator, the awesome oscillator. Now, the awesome oscillator is pretty simple to utilize, but there's a few things that can make your life a little bit more, I guess, safe, for lack of a better term. Is the first thing is, what color is the bar? Is it red or is it blue? The biggest thing that we want to look for a confirmation with this sauce is the red awesome oscillator, right? So we would want a red bar. Now for sells, if you want to get super specific, is you would want the bars, instead of facing up, facing down, because once they flip down, that means that we are also officially in a downtrend based off the awesome oscillator. If the bar is facing down, but it is blue, that may mean we are seeing a small pullback, which what do we see? We see two buyers dojis, right? Same thing over here. The awesome oscillator is facing down, but we're seeing blue bars in conjunction with blue candles. You know, sometimes the bars may be a little bit lagging, meaning we see this green doji candle, which would be a buyer's doji, but the awesome is still red. And we're seeing a conflict of confirmations. That may mean that we may be seeing a potential reversal, a potential pullback. Market could be going sideways, that we may want to wait to do anything. And realistically, there's nothing for us to do with these confirmations right over here, right? So the biggest thing is that your awesome oscillator should be red for a sell, right? Now, our next indicator, the DMI. Now, the DMI has a few parts, right? If we're looking for a sell, we would want the red DMI over the blue DMI. Red over blue, because that would mean that sellers are in control. Now, if we're looking to get really specific with our confirmations, especially for HFX, is we want, especially for HFX, if you're trading 1 minute, we want the black DMI line to be at least above the 40. Same thing for FRX. Sometimes for FRX, we can get away with momentum being a little lower than the 40. But me personally, I would never trade HFX 1 minute trades if momentum is below the 40. So what I like to do is I always add a horizontal line in my DMI, and I set it to the 40. So now let's see. And I said I would mention this. So I'm going to load up the custom candle indicator. Now, for those of you that are setting it up on your own, right? This indicator, though it's a little bit faster than the super trend, not by much, you can set it up on your own. Personally, there's two different ways you can set the super trend. It can be a 1-to-1 or a 4-to-1 ratio. What that means, let me go over here. Let's see something so I can show you guys. Because prior to me getting that custom indicator, I use the super trend. So the super trend And I personally prefer it to be 1-to-1. So the super trend would have your length and your factor be at 1. If you're doing this on your trading view, you would make, I personally recommend for FRX 1-to-1, for HFX, because it'll make it more accurate, is having it to be, wait, did I reload the same one? Oh, I changed it on both. Let me just see something. Length, form factor. Yeah, so it would be 1-to-4, I believe, on Super Trend for HFX. I'll have to reconfirm that. Can't believe I changed that on my harmonic scanner. But either way, what you would do is in your indicators, and you can do this on TradingView, you would search for Super Trend, right? Super Trend. You would edit for FRX. I utilize 1-to-1. Sometimes you can use 1-to-4. It doesn't make that big of a difference. It just changes the reading based on either the previous 1 candle or the previous 4 candles, right? The next thing that I would do, because the super trend regularly has so much more going on, meaning if I were to hide everything else, you would see this wavy squiggly line that changes colors. You know, it goes above price, below price. That personally, we don't need to see that, right? Especially if we're looking to confirm our trade, right? So what I would do is I click on settings, I uncheck super trend. So all that I see are the arrows. The arrows, right? That's where this indicator comes from. It's from the super trend. So with that said, let's look at our confirmations, and then we're probably gonna go over a few minutes, because I want to get into utilizing this for FRX and HFX, right? So now, I want to find a classic textbook example, because I think for a strategy that people don't normally utilize consistently, I would rather teach you with the classics. That way you get a good feel from it. And then once you back test it and you learn all the ins and outs of the markets, then maybe you can be like, you know what, based off market structure, this is going to drop, that I don't necessarily need my momentum to be up here, or my awesome oscillator hasn't flipped just yet, but I know based off market structure, it's more than likely to clear the trade. So because of that, because it's a new strategy for a lot of you guys, I'm going to find the perfect example, which I believe here. Let me see. I want to find a good example. Top is low. Let me see. Let's go to the 30-minute. Momentum is low. This is good. Okay. So let's clear this out. Okay. So the first thing that I said for our confirmations is price needs to be near the top red band, right? Which it is. The first thing that'll grab your attention for your trade is realistically going to be an arrow from the super trend. And we would want this arrow to be over a flat top red candle opening, crossing, and closing below the Blue McGinley. Opening, crossing, and closing below the Blue McGinley, right? That is the second and third thing you'd want to look for. Down arrow over a flat top red candle. Now, I had back tested this strategy without the candle. This pro entry, this super trend, whatever you want to call it, confirmation came after the strategy was developed. That prior to it, it was literally no arrows. It was just flat top, red candle. Honestly, sometimes the candle would come in a little bit late, then we would lose some pips. But now that it's been refined, we're seeing the candle with the arrow coming sooner. So you don't necessarily always need the arrow. That's a question I get all the time. Would it add an extra layer of confirmation and security? Yes. But if you can't set up the indicator because you're maxed out on your indicators, because you have like the basic trading view plan, no stress, get rid of super trend, just follow the confirmation of a flat top, red candle, crossing and closing below the blue McGinley. Now, if you have your red arrow, and let's say this red arrow comes over here above this doji, that is not the candle you're looking for. The biggest thing is flat top, red candle, crossing and closing below the blue McGinley, right? Ideally with the red down arrow, right? So red Donchian channel, red down arrow, red flat top candle crossing and closing below the blue McGinley. Yes. Then we want the red awesome oscillator bar directly beneath this candle. So the way we're seeing this red doji with this blue awesome oscillator bar, no, we want red, 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 red. Yes. Then we want our stochastic red over blue, and it is also in a perfect level, meaning that if this is 60, we have it well above the 60, close to the outer limits of the purple zone, which means that's the outer limits of where the buyers would be going, right? So that would be the next thing. Then we want to see our DMI. We want red over blue, which we do have, and the price's momentum to be at least at the 40, which we do have. So all of our confirmations line up. Now, going back to the beginning of this session, we see that price reached the weekly resistance level, where historically we've also seen once it reaches that level, realistically, it is to drop, especially since it's only reached price. Let me see which touch is this. This is the touch before this one, before the massive drop that just happened. So over here, price would have reached this level only once before. Over here, only once before. So because we know that this is an equal high, which would technically be an E1 entry in conjunction with our super sauce indicators lining up, look at this massive clean sell, right? So now we're not going to have enough time to get into this guy over here. So now our entry is not the candle with the arrow if you're using the super sauce. Actually, let me rephrase this. If you want to be safe, if you really want to be safe, our entry shouldn't be this arrow. If you, for FRX especially, shouldn't be. Personally, I've back tested this enough times that I've seen, and I have a more advanced version of this template that the confirmation for the entry has shown to be the same exact placement as this arrow, that now I enter my trades once I have this lined up, But if you want to be safe, and especially for HFX, this is how I traded with HFX. I don't enter on this candle, especially for HFX. My entry zone, and this is where we're going to start ending the session with, is from the top of the body to the bottom of the body. So my entry zone is the candle body. Candle body. And we want, ideally, if you're going to use this way of entering your trades, whether for FRX or HFX, is to have the next candle, which will technically be your entry candle, to open up at a 50% retracement level, which is basically meaning that the candle is opening at half or where this candle was at, and closing below it. That would be the way you would enter for FRX and HFX, especially if you want to enter the safe route. Now, let's say you want to utilize this for HFX. Let me see a good level. Because this is what I utilize to trade it. Trying to find, here we go. Actually, oh, it is over here. Okay. So let's see, we're seeing, we're seeing price went down, it went up, created equal highs, reaching the weekly resistance level. It broke through. Let's say I confirm the reversal. Realistically, I probably would have skipped out on all these trades just because of how small the bodies of these candles are. I would want to find more consistently shaped candles and sizes. Let me find a good example. Let me find a good example. I swear I had this prepared before my computer crashed. Promise you guys. I'm like, not this person. Oh, my computer won't let me be great today. Let's see. And we have it. I want to find 16,230. We just have to make do with what we have. This is not a good example. One second, guys. I'm just trying to find you guys the best example. Because especially when we're doing short trades, I only do 1 minute trades. I get really picky. And that's exactly what I'm doing right now. This may work. Let me look at one more pair, just in case I can find a better example, but if not, we'll use that example. Usually AUD cat is pretty good. Okay, this is perfect. So we have all of our confirmations from what I can see quickly. Prices near the top red band, red down arrow, flat top red candle, opening and closing below the blue McGinley, red over blue, red awesome, red DMI black line is above the 40. So now the way I utilize this strategy for HFX, and I don't trade this time, so I'm not gonna try and call any trades right now, is I would confirm this candle. I would confirm this candle, meaning I would want to make sure all my confirmations line up. I would also want to make sure, this is big, guys. I would want to make sure that on the 5-minute, I am also trading, meaning in the 5-minute, I'm also trading in that direction of the move, which the move is down. It created a high point, lower high, right? Went sideways, lower high, lower low, like the aura move is down. 15-minute, again, high point, lower high, lower low, lower high, lower low, red candle. So overall, the move is down, came up here, began dropping, high, low, high, lower low, lower high, dropping, right? So I would want to confirm for HFX, especially, that we are trading in the direction of the overall trend, especially if you're doing 1 minute, that it is, continuing for a sell, the sell on the 5-minute, 15-minute, 30-minute minimum. Those are the minimum time frames I would confirm my direction for HFX. Once I confirm that, confirm my confirmation candle, the way I trade HFX is with this strategy is I would wait, and usually I have my broker up and then this strategy loaded up on a different screen. Excuse me. I would wait until this candle closes. What I pay attention to is two things. I pay attention to where was the price level that price actually closed, and then how far did it travel. So what I like to do is once I'm seeing it getting ready to close, which is like usually 5 seconds left of the candle on the 1 minute, is I would make a quick mental note. I'm like, okay, it seems like it's closing at 670. And because I've studied this and only have traded this same strategy since October, I know price usually pulls back, usually, not always, within the 50th and 42nd mark of the next candle to the closing of that price. So what I do is I wait for this candle to open. I'll quickly switch over to my broker. And once I see a quick pullback, ideally, and let me just load this guy up now. Ideally, I would want it for a sell to at least reach the closing, or preferably the middle. Usually it never reaches the middle unless it's either a very, very spiky market or momentum is just beginning to pick up. But once momentum is in full swing, meaning the prices is dropping, usually the pullbacks are to the closing of this candle. Now, what happens if prices is massively, massively dropping? Now, this for more advanced people that I would offer up, if you want to utilize this strategy for HFX, just stick to the safest entry, which would be minimum for a sell, price pulling back to the closure of the previous candle. But if you're more familiar with, trends and momentums, you may be able to find that price doesn't always reach the closure, but sometimes it'll just reach the end or the middle to the end of the previous wick, and you'll be able to enter there. So usually what happens, at least for me, I was trading yesterday, and I'll be able to get in. I'll get in here, And usually I have like a every other candle trade. So I'll get in here, I'll let this candle go by, then I'll get in on this candle when price pulls back over here. That's 2. Let this candle go by. Right. Let this candle go by. Let this candle go by. Boom. I'll get in over here. Now, once I start seeing that price is getting kind of like really close to this blue line, and the way that I know that it may be reversing soon is that now price is touching the blue line over here, or is close to touching it, I stop trading. I stop taking sell trades. Because what happens is, you know, we're going to see pullbacks and spikes and dojis that I would want to wait. But realistically, you don't have to wait till every other candle. You can do this, enter on this candle, enter at the price of this candle. But realistically, my trading sessions, when the market is perfect or close to perfect, I usually only take about 4 trades and then usually am done in about 20 minutes. And just yesterday, I was able to get about a 12% increase, literally at 4 trades on 1 minute. And that is literally by just accompanying all of market structure, getting really specific with my indicators and my confirmations. And that way, let's say there's maybe a temporary pullback for a quick second, because Heikin-Ashi candles aren't always a truest reflection of the market price, that a temporary pullback could maybe push price up past my entry on a sell. I wouldn't have a problem rolling over because I know sellers are in control. So with that said, guys, do I only use a 1 minute chart for that? So personally, I enter off the 1 minute chart. Now, but what I do is my lines, my structure is based from a higher time frame. So I enter off the 1 minute chart. Now, excuse me, there is a version of this that I'm working on obtaining. Not the candles indicators are based off a 15-second candle, which it gives you like the quickest entry. But if you wanted to utilize this, let's say on the 5 minute, and you're not comfortable with just going off the 1 minute chart, what you could do is same confirmations, red, right? And you want to take a 1 minute trade. It's like the minute you know the price is going down, take a 2 to 3 minute trade from the 5 minute. Realistically, it should clear. You know, take a 1 minute trade after 5 minute. Sometimes you may need more time, and it's also preference and comfort. Me personally, I've only ever taken 1 minute trades. I don't know why. I hate 5 minute trades. I hate 15 minute trades. I hate 10 minutes. I hate anything past 1 minute. That all I know how to trade is literally 1 minute. When somebody talks to me about trading a 3 minute binary trade, I'm just like, I can't. It doesn't work for me. But all in all, even if I'm trading 1 minute, my analysis comes from my higher time frames. That's why if you're trading HFX, you at least want to confirm the directional move on the 5, 15, 30 minute, and 1 hour. If any of those look conflicting, like let's say this is saying sell, 5 minute is saying buy, 15 minutes saying buy, 1 hour is like just a bunch of dojis, maybe you just don't trade that pair and find something that's a little bit more consistent. So on that note, guys, I'm going to end the session because we are definitely way over time. I'm going to drop the recording. I will not be assigning homework or any new homework because I'm going to finish reviewing everybody's homework from last week and give you guys feedback, which I've seen most of them. There's a few things from everybody that could be a little bit more specific and accurate. So the homework will probably be to redo some of your charts. But on that note, guys, I hope everybody has had an amazing evening. I will drop the recording once it is up, and I will talk to you guys so soon. And FYI, my sessions for this week, FRX and FRX on Tuesdays and Wednesdays are not happening. I'm finding a new time. It's just a time frame that I was trading. It's just not good. But I will talk to you guys soon. Enjoy the rest of this evening, and I'll talk to you guys later.